It is FOMC week, and we are back. Excited to be here with you today, everybody, talking about the dump in the crypto markets. Has the equity market topped ahead of this FOMC meeting, and much more today on Money Never Sleeps. Thank you for joining us, ladies and gentlemen. Before we get going, do us a favor, hit that like button, subscribe to the channel. Nothing Kevin or I say is financial advice, so please do your own research. Kev, it's good to see you again. We've been off since last Thursday. A lot has happened. In the interim, we have, crypto being incredibly volatile, huge moves down that are trying to get bought back up. We see TradFi was off to a rough start today. That is on the comeback trail as we speak. I'm seeing more and more warning signs. We got issues over in Asia, which I know you want to talk about. I'm seeing more discussion around, concern with the commercial real estate market. We can discuss that. We got JPOW talking tomorrow. We're not going to get another Fed, a move in the Fed rate. I'm expecting it's pretty much locked in. We're not going to get anything, but I think Powell's tone is going to be really important. Meanwhile, we got Bernie Sanders and Elizabeth Warren demanding that we get rate cuts because they are economic geniuses and they know exactly how to deal with inflation right now. How are you doing, Kev? What are your thoughts on everything that's happening?
I had no idea that Elizabeth Warren and Bernie Sanders also, hey, how's it going, man? I had no idea that they had said that. I agree with them. I don't know what's going on in this world, man. I'm agreeing with people I would never agree with ever, but let's talk about the FOMC and we can figure out kind of why I agree with them, because there's a lot of things to unpack here, especially with how much people are cutting the fact that there's probably not going to be any rate cuts until July now. I saw a lot of people pricing in July as the first time they'll probably cut rates.
Let me pull up the CME futures and we can see what the expectation is there.
Because it seems like the May meeting, the one that they were talking about, it doesn't seem like they're that excited about that now.
Oh, wow. It has moved bigly. 1 month ago, it was about a 70% chance that it would be no rate move. And now it's about a 93% chance that in May we're not going to see anything. So expectation is these rates stay higher for longer. It's what the Fed has been saying for months. Remember last year when everyone was pricing in 7 rate cuts? We're going to have 7 rate cuts this year. And all of a sudden, the Fed kept saying, we think 3. We're looking at 3. We think it's going to be 3. And now it's like, oh, shit, maybe we should price in 3. So I wouldn't be surprised if we don't get anything until September unless something breaks, which is seeming more and more likely by the day.
Yes, sir. That's the big problem, right? The fact that we are in a debt-based economy, and the entire global, economy is debt-based. You need debt in order to issue new money into the system. It's how you pay off old debt. It's by introducing new debt. And because the rates are so high, nobody's taking any of that debt out. We're just seeing, a ton of this money just end up. Oops, I had the wrong microphone on. There we go. Maybe I sound better now. It's a ton of people that were just pretty much relying on, debt to kind of survive. We're seeing it with the credit cards, but as the banks start to see more problems, they're going to start kind of cutting how much credit that they can extend to people, right? The biggest problem, and we're starting to see it now, I saw an article, I can't remember where it was from, maybe it was Bloomberg. It was talking about how a lot of these banks are offloading bad debt at big losses because they need cash. And the reason they need cash is because there's a good chance that there could be a bank run. There could be insolvency concerns. The rates staying this high, and it seems like they're going to continue to stay high, and everyone's really, really bullish on the fact that inflation is going to come back. I think everybody's got it wrong. And that's just my opinion, but it just seems like we're going to see something break and we're probably going to cut back to zero as fast as they possibly can to save the system. I don't know how well that's going to work out. I think that even if they do QE, there's a good chance that we're going to continue to see very similar to 2008, where for 2 years or so, consumers are pretty much fucked. The market might come back, right? The market might come back 9 months after the absolute bottom, but the consumer can stay fucked for a period of time. It's a very likely possibility. We could see layoffs go all the way into, I don't know, 2025, 2026. to that point. Just because, we slow the economy so fast and we start doing QE, these banks are still kind of in fight or flight mode, probably going to be more survival mode at that point too. And then eventually it'll start to pick up. But I think right now, with how inflation is purely driven by oil, that's the only thing that's the reason why inflation is being a problem for a lot of countries. Tells me that if something's manipulated that much and it's affecting the entire inflation data and everyone's excited about it and it's affecting how the central banks operates, tells me that we're probably not in an inflationary period. I think if anything, we're in a deflationary period, and we're just having one thing that we're all getting caught up on that's absolutely manipulated, which is the price of oil right now.
Speaking of banks, I want to bring up commercial real estate for a second, because I believe previously we've talked about commercial real estate collateralized loan obligations, correct?
Yes, sir.
We've discussed that on this show. Well,
Mm-hmm.
guess what? Now that shit is showing up on Bloomberg. Nice little article I saw before we went on today around concern over these commercial real estate collateralized loan obligations, or CRE CLOs. And in here, they say very clearly they bundle debt that would usually be seen as too speculative for conventional mortgage-backed securities.
That means too risky.
Risk and return. Where have we seen this shit before? And what the fuck happened when things went tits up? Like, the blinders are on so many people right now still. Like,
yep.
We had this big NVIDIA AI conference going on. You got that picture of
it was Jim BS.
By the way, was just unbelievable. I couldn't tell if Jensen was just creeped out by Jim Cramer, if Cramer had farted and Jensen had just smelled it or something. But oh boy, that was a hell of a picture that will be memed to Kingdom Come. But the blinders are still on, and like, this bubble keeps growing bigger and bigger and bigger. And the price of NVIDIA has remained incredibly high. It was down today. It was down to 850 earlier today. It's rallied back to 900, so it's now positive on the day.
Yep.
I have no regrets about selling my NVIDIA positions. Like, does it look dumb now? I guess so. It's higher than where I sold it. Do I think that's going to be the case in 3 months, 6 months, a year? No, I really don't. And the vendor financing, all of the things that we are seeing with this, like, it stinks, Kevin. It stinks to high heaven. And I don't know, maybe we're just going to be the old guys. Like, we're like the two old guys from the Muppets, Statler and Waldorf. We're just sitting up there heckling, and maybe we look like idiots, or maybe we look like geniuses.
I think we're geniuses, man. And maybe that's because it takes a genius to know one, right? But the fact that you brought up the CLOs, I had no idea that Bloomberg had put that out there. But just so everyone's aware, the people that have the CLOs are not your regional banks. They're not your your, I don't know, give me a regional bank, US bank. It's not going to be, these smaller banks that are, your New York Community Bank. It's not going to be them that have it. It's your Bank of Americas, it's your Citibanks, it's your Wells Fargos, it's your JP Morgans. Those are the guys that have the exposure to CLOs. They are probably offloading those, or trying to offload those as soon as possible, because if this CRE bubble pops, all the underlying value of some of those assets on the lower tranches of those CLOs brings everything down with it. So we've seen this before. I'm not going to say when, because it wasn't that fucking long ago, but it's the same exact scenario. It's just the only difference of it, instead of it being mortgage-backed securities for residentials, we're talking about commercial real estate. And we know that's even worse if people continue to be unemployed, which we are starting to see a lot of unemployment, right? I saw LinkedIn is getting rid of an office building. When LinkedIn is laying people off and they're getting rid of an office building, the irony is absolutely hit. I do want to pull up a few things real quick that are really funny to me, and it kind of leads in, that we can go into Japan Bitcoin. But the one thing I wanted to share, whatever I was trying to say there, is Empire State Manufacturing Survey that came out, I believe, last week. And let me just zoom in here for us. So this is the general business conditions. We can see kind of how everything has been from the month prior. Everything's negative 18.5 for general business conditions. New orders, negative 10.9. Shipments, negative 9.7. Unfilled orders, negative 1.3. Delivery time, 2.2. Okay, good job on the delivery time, guys. Negative 3.3 for inventories. This is an absolute contraction, right? And I think it came in at negative 18 point something is a total for the survey. Now, the interesting thing is we got the jobs data last week, and the reason that it came in higher is because New York created a ton of jobs. Everything came from New York, specifically New York. It's not in manufacturing. That's the interesting thing. Obviously, this is contraction. You're not going to see the mad jobs in New York if they're seeing this on the monthly report. The big thing that we have to keep in mind is there could be a huge discrepancy between that and reality. I think this manufacturing data, the survey is a lot more accurate than some of the data we're getting out of the Bureau of Labor, just for the time being, because I think there's a lot of factors that are playing into their data and how they're calculating it. But the interesting thing is, once unemployment continues to rise, we're going to start to see pretty much this bleed into all sectors. We've seen it in manufacturing. I think we're going to start seeing it in the services sector pretty soon. And I wanted to pull up one other thing, kind of relating back to commercial real estate. Let me see if I can find it on Twitter from Macro Edge. A $345 million CMBS loan backed by 8 hotels has defaulted per TREP. And there's the connection back to what I was saying, the services sector, the 8 hotels. We're going to start seeing people travel a lot less. And because of that, you're going to start to see the demand for oil this summer drop significantly. I don't care what anyone says. I think we're going to see the deflation faster than people probably expect. Might be a few months, might be out of the way. But if people aren't flying, people aren't traveling, they aren't doing the things that they usually do in the summer, it's going to be hard to keep that price up. They're probably going to continue to cut, but at some point, you can't cut oil much more, right? It's going to bring the world economy to a halt. Whether they cut to the point where it's just unfeasible for some of these corporations to function, and you start to see them go out of business or cut, more heads just to stay afloat, or you just start to see people, because they're being cut, not do as many things as they need. And, the requirement for a lot of oil in this inflation is just going to go away. So it's it's almost like the perfect downward spiral where everything is interconnected, and it's just going to drag everyone down underneath the water with it. I don't necessarily know if there's any saving grace in what's happening here. So commercial real estate to unemployment to oil, it's all interconnected. That's the funny thing. And no one sees that. That's the dangerous part of this all. And all it takes is one piece of the puzzle to go away, and then the entire thing just absolutely collapsed. I probably should have said one piece of the Jenga pile to go away, and then you get the drill. But that's what I was figuring. We're probably going to see in the next few months, and people just aren't seeing it right now. I mean, I had a friend at work the other day who was saying something like, "Where are people getting laid off? Like where?" Well, it's not on the news because it's probably not something that they want to report, right? I think a lot of people are just kind of blind to the fact of what's happening here. I mean, we're starting to see unemployment continue to rise. It's going to get worse in the coming months, but as the job hours also drop significantly, I think we're in a world of pain. We're just continuing to see data that supports what you and I have been talking about. So yeah, I do think that we're geniuses, Jweb.
I saw another good article that was just published recently around the Blackstone Mortgage Trust and how, very well known short seller Carson Block and his firm Muddy Waters has been shorting that since December and sees a lot of pain ahead for Blackstone's mortgage trust. So more concern there when it comes to commercial real estate. Let's get to FOMC tomorrow. Scotch and Stocks tease us up, asking our thoughts on the dot plot. I think based on what we saw in the most recent PCE data, that the Fed is going to, most of the people are going to continue to advocate for a higher for longer number on the dot plot. I don't know if they're going to say that they should raise rates more at this point. I think if we see another hot inflation report, that could change. But I think for this meeting, based off of the fact that core PCE is almost double what the target rate is, it was at 3.8% when it came out most recently on the year over year for core. I think that we see a dot plot that shows a higher rate and I think they stick with the 3 cuts this year. I don't think they want to take that off the table. But yeah, I wouldn't be surprised if there's no cut in May or June, if we don't see one until the September meeting. That to me seems like a likely outcome for the dot plot. I'm curious what your thoughts are.
I don't think it matters. I think you're probably right when it comes to how many cuts that they're going to, advocate for out loud. I think that when they do cut, it's not going to be 25 basis points. I'm pretty sure it's probably going to be big, like 75 to 100 basis points at a time. I genuinely think that's how fast it's going to have to be in order to save some of the economy and, some of what's probably going to come. Because again, I say this all the time, but in a debt-based economy, if you don't have debt being issued, well, then it's going to come to a halt. And it's kind of a scenario right now where they're kind of manufacturing this to happen, very similar to how it's happened in the past, where it's like the conditions are perfect for everything to go, or that was a bad sound effect, but kind of go bust. And they could tell us everything that they want to. At the end of the day, they're not going to tell you the truth 100%. They're not going to want to worry the markets at all. But there should be things that are coming rumblings. So you in the camp that they cut because yes, absolutely. I've been in that camp for a long time. I think at least about a year. I think I was hoping that we would get rate cuts already to the point where as you're cutting, then we start to see things kind of fall out. But how much it's rallied, how Paul's tone was back in November, where he was like, yeah, we're going to start seeing rate cuts, and the market kind of rallied from that to where we are now and seeing how volatility continues to be suppressed significantly and things are getting worse by the day. I'm in the belief that we're probably going to see something very similar to Volmageddon / some significant crash in the market.
Sell in May and go away this year could be an absolute bloodbath. If
Maybe.
we Fed, we have this meeting tomorrow, and then I got to pull the dates up again, but I think they don't meet again until May.
Yeah.
If we get another indication, May 1st. So, I mean, listen, May could be a bloody month. If they come out, if we get more bad news between tomorrow's meeting and the May 1st meeting, and they indicate that they're going to have to keep rates up even higher, or God forbid, raise again, May could be an ugly month. It could be a very bad summer if you're not in a position to buy some of these dips. So along those lines, let's talk about crypto, because we're at this point right now. We saw Bitcoin get close to 74K. It was solidly in the 70s for a few days there. We saw ETH near, over 4,000 for a couple days. We saw Solana go over 200. So the question now is, and what I think a lot of people are asking themselves as we have had a few days of losses, is this just a correction that happens during a bear market, and we're going to continue to go back up here in the coming weeks, and you use that opportunity to buy the dip? Or are you in the camp of, no, this was, we peaked and everything else going on in the macro is starting to catch up, and now we begin to take this retracement? I am of the latter. I have not used any of my liquidity to buy over the last few days. I've just been kind of sitting here waiting, because I kind of think that we're starting to see the bigger macro problems really rear its head, and the big come down is still on its way.
I love that you use that. That's our term that's what our movie's gonna be called, the big come down, not the big short. But yeah, this is I mean, I think it's pretty obvious where I stand on this. Now, could Bitcoin continue to push up a little bit higher? I did see a tweet earlier that said like $8.3 billion worth of shorts could get liquidated if it pushes up to 74,000 again. Is it possible? Yes, absolutely. But I've said this for so long. There's so much liquidity sitting below us, all the way down to about 24, 25K. I mean, 28K is a good amount, and 50 to 51K, there is so much liquidity. I think that's where we're heading. It wasn't too long ago I said that we needed a $10,000 drop in Bitcoin in like a single day. Almost got there, guys. It was 2 days that it took for us to get about $10,000 down. So, I'm not saying anything like told you so, but I definitely want people to realize that this could go either way right now. I have no idea. No one has any idea. Nobody's a prophet. I think that it's very dangerous up here. And I'm just looking at this on the shorter time frames. This is the 4 hourly. Of course, it bounced off the 200. It had to. There's no level of support really below that until around 51K. So if this didn't bounce off the 4 hour 200, then you probably would have been looking for a massive correction, which I do think that if we do lose this, we're probably going to see another dump that deep. I'm not saying that it's going to happen today. We could get one little bounce, ABC correction to the upside before we get there. But that's a 20% move to the downside that we can get from where we currently are. Is that possible? 100%. There's that much liquidity just sitting down there. We need to be cautious of that. Now, the funny thing for me is just how people who are buying these ETFs saw a 15% drop in the matter of 3 days. I think that's hilarious, because now you're getting exposure to the crypto volatility too. And you're probably not going to want to be
Leroy Jenks cracking me up here. A little dipski for the bitski.
Gotta love it, man. I love to see. Here's the thing. It's more fun when we start to see these crazy price volatility moves right back and forth. And the thing is too, when you start to see a lot of volatility, and we're seeing it also in the indexes right now, kind of tells you it's the end of a move, but it can go on a little bit longer. Who knows? But I think Bitcoin, is correlated with the NASDAQ for pretty much since October, even if we want to, account for all the bullshit fucking tether shenanigans. But seeing
I
that,
want to talk
and
about Scotch and Stock's comment for a second, real quick.
yeah, absolutely.
So I do not think we are getting a dovish Fed tomorrow. I think Powell is going to come out and he is going to be lighting the world on fire. Like, I think, he's never too emotional, Powell, except for when someone asks him a stupid question, and then like I just love the look on his face, like when Elizabeth Warren does some dumb shit. But I don't think he's going to be dovish tomorrow. I think these most recent reports on inflation have ensured that he's not going to be dovish tomorrow. So if the markets are planning on that, and that's what they are pricing in at the moment, that he's going to be dovish, then maybe you go for a little, not financial advice, a little short on like the QQQ or the SPY or something, because I think we are going to get hawkish Powell tomorrow, personally.
Yeah, I completely agree. But again, I have no idea. And I don't care about these markets right now because we are in a very, I said this,
Do
I'm
less.
not playing, do less. Not playing this game. This is a game that you lose. I think the game to win is if you know where the price is going, be standing there with cash ready to go, right? I think that's the belief that I've had, and I will hold this into next year until we finally do bottom out. But Bitcoin, the thing is, I think that there's a good chance we could see this be the top in here at 74K. Yeah, 73, 74K around there. If we hit that 50 moving average, game over, right? If we on the daily, if you start hitting that 50 moving average, there's a good chance that that doesn't hold. And again, that's probably massive low that you don't want to see. It's below this move that we got down here on the way up in March 5th, it seems. But you start losing that, you're coming down to 50,000, and then you're probably going to be putting in a lower high because pushing up from 50,000 back up here, unless Tether has the printers ready to go, you're looking at expecting a 30, at least a 30% move to the upside. So just keep that in mind. I did want to show this because I want to show you what a derivative of Bitcoin looks like, and that's MicroStrategy. It's had a bad day yesterday. It was down roughly 15%, and this morning it was down another 16%, but it's bounced back as Bitcoin starts pushing up. This chart looks no different to me than what we saw back in 2000. Look at that red candle coming straight back down. This is what the end of a mania top looks like. And if this is the end for Bitcoin, this is probably the end for MicroStrategy as well. I just want to pull that up because fuck Michael Saylor. Personal opinion, not financial factor, advice. It just seems like this is a derivative. It only does well if he's buying Bitcoin or if they're holding Bitcoin and Bitcoin's price is going up. No one can tell me what MicroStrategy does outside of him saying there is no second best. But
Calling people poor on TV.
Exactly.
He's just such an just maybe not the best person to be the face of Bitcoin. Like, just an absolute douche canoe.
I can't stand that guy, and that's just personal preference. But yeah, looking at this, I want to pull up Solana too because I was having a really great weekend. Everyone was going bullish on Solana, and I hate to say it, but it shot up all the way up to 210 or so. It went all the way down to 170 this morning. There's a lot of volatility back and forth here.
So I want to bring up something real quick.
Yeah.
I know that we're not big centralized exchange guys, but I have had some SOL on Coinbase that I got months ago. And I got, and I've been holding it there, and I went ahead, it wasn't much, and I was staking it through Coinbase, and they were paying out their SOL staking like every 2 to 3 days. Well, I haven't gotten anything in over a week. And I also had some USDC on there that was earning 5%. They were late to paying out the interest on that as well. And they had been very punctual with paying out the interest on their USDC. And they're about 5 days later than usual. And like I said, it had been a consistent every 2 to 3 days you were getting. That's what it said in their terms, that you'd be getting paid out your staked Solana, the small amount every couple of days. It's been a week now. So I don't know. Is there a liquidity issue at Coinbase? I'm slightly concerned about that. I've unstaked my SOL there. I'll be moving it off of their exchange. I have concerns now around Coinbase, and I am acting accordingly.
Well, you know how I feel about Brian Armstrong, right? I don't think he's going to be there for the long haul. That's just my personal opinion. I've said that in the past. I think there's going to be a lot of regulation that comes with Coinbase because obviously that's very sketchy, and things will come after things happen. That's the unfortunate thing. But that's a very bad sign when you see a centralized exchange not do kind of what it's obligated to do. You could have been making 45% on USDT or FDUSD on one of these other Binance exchanges, Tether exchanges, where they're just paying out literally. Do you know that the stablecoin returns are that high on some exchanges, right? It's like 40%. Does that not sound like a red flag? I don't know.
Oh,
What do I know?
Legit. It's totally legit.
I only called out CZ before he got arrested. But that's my only brag I'll do this year. This is what I want to show with Solo. It's shooting up like crazy, and a lot of people are getting excited again. I think Solana's kind of shitty. I mean, let's put it this way: any blockchain that can do blackouts and is pretty much sponsored by FTX for the most part, not anymore, but their biggest fan is a guy that's in a cell right now. Kind of tells me that this is something that you should proceed with caution for the time being. It's very VC backed. It's an ABC corrective pattern. Is what I'm seeing. Unless it gets higher than 258, which it could. I can't fight mania. I think that you're going lower or equal to where you were back in December of 2022, which means $8. But we saw how fast it fell with the collapse of FTX. I think that a lot of people definitely want to get out of this thing. I think a lot of people are just gonna move money when it comes to a lot of these things as time goes on, right? A lot of VC guys are just gonna back when it's time to back some of these things. They probably want to get out because they got screwed on FTX. These manias you can't fight. I mean, just looking at Binance, look at Binance. It shot all the way up to fucking $644 after when he gets arrested. Is the literal bottom of this freaking move, and then he'd start shooting up since he gets arrested. So this is an absolute Ponzi market. This is not one you should be fighting. I think that I'm happy sitting here knowing that when Bitcoin gets to my target, I have cash ready to go. For the time being, though, I'm not playing with these markets. I did want to finish up today just on the Bank of Japan because that's really important too, and that could actually impact the price of crypto as well. And I know you got to leave very soon, so we'll make this quick. Let's go to Bank of Japan. They ended their negative rate cuts. The yield curve control. This is something that they had for a long time. It is gone. The rates aren't crazy, guys. It's 0.1%, 0 to 0.1% as the rate range that they're looking at. Nothing, not like us Americans who have 5.5 for the federal funds rate. This is very low. However, this is important because the last time they did it was in 2007. And the funny thing is they're not buying equities, but they're also not stopping the printing of Japanese yen. That's the key there. So you could actually see the Nikkei continue to rally. I'm going to pull up the Nikkei and show it yesterday. Something that was as bad as the news yesterday probably should have sent it down a lot further. However, it shot it up higher, closer to all-time highs. It's at above 40,000 right now. Got to go in closer. That's a crazy chart there. Yeah, don't worry about those numbers, but you can see how much it shot up right here. It bounced right back. You can see that never even tested the 50 moving average on the daily, which it hasn't since January of this year. Be very cautious to see how this plays out. But we do know that once they started raising rates back in 1989, once they raised in 2007, the following year tended to be absolute massacre for this index, right? And the interesting thing is too, as we see the Japanese yen right now, it is losing value like crazy. This is going back up into this range up here. And what's this mean? This means that the dollar is going to get stronger. So now we have a strong dollar against kind of a faltering Bitcoin price, equities that are kind of seeming toppish, in my opinion, could push up a little bit higher. But the fact that the yen is losing value to the dollar means that they're either going to have to step in, equities are going to have to sell off, and the yen gets stronger again, which kind of weakens the dollar in the US. But there's a chance that they can actually get stronger together if equities all sell off at the same time. Them making the first move out of all the central banks, they're the last bank to have negative interest rates, kind of tells me that we're getting to a place where a lot of the central banks are going to start moving. I talked about this on Friday's show, and obviously Monday they decided to do it. Very interesting to see how this plays out, because as the rates continue to push up here, that means that there's probably going to be some downward pressure, some sell pressure at the top there. And we know that a lot of the reason that the Japanese market has increased is because a lot of people are moving money out of Asia, specifically out of China, into the Japanese market because they weren't feeling safe with what the price was doing in that spiral for a long period of time. If now we're seeing the top there, where's this money going to flow into? My opinion, it's going to be bonds, because I think a lot of the equity markets globally are going to have some problems. Maybe it flows into crypto. I don't know. Again, I'm not a prophet. I'm not going to say what actually happens in the future, but it seems like the treasury squeeze might be the play. I'm not saying it's going to happen today or tomorrow, but I do think that by, I don't know, 2025, I think a lot more people are going to be happy that they locked in some high yields with some of those treasury bills.
All right. That is how we're going to wrap it up for today. Appreciate everybody for joining us. Lively conversation here. Ace, Leroy, Scotch and Stocks. Thanks for joining us, fellas. We'll be back tomorrow. We're going to go live a little bit later. As soon as JPOW is done with his presser, or once it reaches a point where it is just too boring to keep listening, we will start up the show. I saw what Ace was saying, and I was still fine just recently, but maybe it's changed. I don't know.
Crypto.
If you have not yet, don't say something.
I'm just joking. Yeah.
If you have not yet, like, subscribe, comment, share us out, yada, yada, yada. Appreciate y'all for being here. Stay safe in the markets, and we will see you tomorrow.
Take care, everyone.